Hi, everybody. It's Matt Schweitzer with North Rim Commercial Properties, and I'm really excited today to be able to do another interview here in our studio at the Waterman Building. And we have a special guest today. We have Julee Felsman with Guaranteed Rate Mortgage, and I'm really looking forward to an opportunity to be able to discuss with her business and the ins and outs of the mortgage industry. So, Julee, welcome.
Thank you.
Glad to have you here.
Thanks for having me.
It's exciting to be able to, this is really a lot of fun for us to get to do this. I love the ability to be able to interview folks about their business and what they do and how they do it. So thank you for taking the time to be with us today.
It's my pleasure.
Awesome. So guaranteed rate is the name of your company.
It is.
Okay.
Yeah.
And you originate mortgages, loans,
I do. Yep.
correct?
Yep.
Okay. So for the folks that aren't familiar with Guaranteed Rate, tell me about Guaranteed Rate as a company. Why would anybody want to work with Guaranteed Rate versus any of the other lenders that, let's say, that are out there?
Yeah. So Guaranteed Rate is a top 10 national lender without a lot of presence in the Northwest. So I knew that when I went to work for the company in May of 2017 that I wasn't going to have a lot of name recognition. I've been in the industry for a long time, but Guaranteed Rate wasn't going to be a familiar name to a lot of my customers. But one of the things I like about what I do, on a long list of things I like about what I do, is that my interests and my clients' interests align in a lot of ways. And a big one is that the place that I work, the platform I call home, is going to give me the resources that I have to offer to my clients. And the more loans that I close, the more business that I do, the more income I make. And so the better rates I have, the more loan options that I have, the more opportunity I have to offer people something where they're going to say, hey, I like that, and that looks like a good deal, and you're hired, and close a loan with me, the better. And so I was very picky when, after being a very long time with one company, I decided to make a move, and I was really careful and researched a lot and really was excited when I found everything Guaranteed Rate has to offer, and kind of in a funny way, even more excited that the company was a little bit of an unknown in the Northwest. I sort of like the opportunity of bringing what I think is a great thing.
So it sounds like the main way that you differentiate, or Guaranteed Rate differentiates from other lending companies, essentially, is it an amount of products they have available, a range of products? How would you describe that? Or how would you talk about that?
It would be a few things, I would say. One is the company has been a leader in adopting what I like to think of as the right kind of technology to make the system, the process of putting a loan together, more efficient. It is not an inherently efficient process. Residential lending is very highly regulated. There is, for anybody who's ever done a mortgage, what can feel like a silly amount of paperwork. And so any place that we can gain efficiency, there are a few benefits to it. One is the process is just more pleasant for our clients as they go through it. Another is it's more pleasant for those of us working on the other side of it, because every piece of paper we need is a piece of paper that we have to deal with.
I have to admit, I remember getting my first home loan and signing, I swear it was 30 pages saying my name was still my name.
Yes,
So
yeah.
I'm assuming that's still part of the,
There's still some
feels
of that.
like that a little bit, probably still, no?
Yeah, it can
Yeah.
still feel like that.
Yeah.
And so any place where we can make that process more efficient, it's more pleasant. But the other piece of the puzzle there is that all of the man hours that it takes to put a loan together, that's the biggest cost a mortgage company has. And so if we can be more efficient, we can also keep our costs down, which then means we can offer better terms to our clients. And so those efficiencies are kind of a big deal for a lot of reasons. And just as an example, the signing that you brought up, we now send the vast majority of that sheaf of documents that you sign when you close a loan digitally, and you'll e-sign most of those. There are about 4 or 5 documents now that have to be signed in the presence of a notary, and everything else can be signed digitally.
Fantastic.
We aren't quite to the point where we can do the whole thing digitally yet, but we're getting close.
Do you think that will happen? I mean, do you think fully digitized?
It's at this point, it's really the process of being able to notarize things digitally using basically video technology. To verify someone's identity and notarized documents exists. It's just up to the states and counties to accept those digital notaries, and then we can do a completely digital closing.
I find it funny. I mean, a bit of a side note, but I find it funny how, like, in today's day and age of everything being, with technology advancing the way it was, we have the capabilities, but yet our regulations haven't caught up to it yet, right?
And we're a super regulated industry. But,
sure.
So the technology is one piece, and one of the things that I've kind of learned is that if in the process of helping my client get a mortgage, I can be efficient in all the places that are busy work and perfunctory, and let's say we're gathering information so that we can talk about things,
Yeah.
that gives me more time to be inefficient when I want to spend time talking to a client about their situation, learning more about what their goals are and how to make sure
You mean you can actually care? I mean, you can care?
and I can answer their questions, and really have the time not feel rushed.
Sure.
When that's appropriate.
I think that's a good segue. Let's talk about then what a new client coming to you. I guess maybe we might have to put this in two different buckets. I'm assuming there's a first-time home buyer bucket is probably one, I would think, versus more of a seasoned buyer. Would you say that's two different animals, or is that in your world, is it kind of treated the same?
Yeah, I would say my processes are built around the first-time home buyer in terms of making sure that I am filling everybody in on every piece of information I think they might need.
Okay.
Someone who's bought numerous homes over the years may wind up hearing something that maybe they already knew, but honestly, how often do people move? You know, every 5, 7, 10, 15 years. And so even if you've moved numerous times over the years, you don't do it that often. The language is unfamiliar. It's not something you really. They aren't terms that you think in all the time.
So your process basically, if you treat it all the same, then you know you've touched every base.
That's exactly it. Yeah,
Okay.
yeah. I've learned over the years I don't want to miss talking about something because I've assumed somebody knows something that they don't.
Good point.
And then later on, learn that they were either uncomfortable or there was some moment where they didn't have a piece of information that they needed to make, the right choice because we didn't cover something.
What advice do you give people coming at you to start working with you? What do they need to know?
I mean, the biggest piece of advice that I would give people is start early with the finance part of things. And this is sometimes difficult for people to do because the mortgage is not the fun part of the home buying process. The mortgage is the necessary evil. The mortgage is the drag. It's the paperwork. But you've got to know your numbers, and you're going to be a better, more informed, more qualified shopper for your home if you have your ducks in a row financing wise. And the sooner you start, the better. I honestly wish I could talk to every single client 6, 12 months before they're thinking about buying a home. And I know that sounds kind of crazy, but by doing, I'll encourage clients to even do like a dry run where we do all the things that we would do when the time comes to buy a home. And I would even include in that pulling up a credit report, maybe even especially pulling up a credit report 6 months ahead of time, because if we get a feel for, okay, here's where we are, it may be that we just go, you know what, everything looks great, you're good to go, when you're ready, say the word.
And 6 months from when they start to want to becoming an active buyer.
Right.
Okay. Got it. Okay.
But there are very often things that I can suggest people do that will maybe improve their credit score a little bit, which can have a huge improvement. It can open the door to different loan options.
How big is credit score in terms of? How big is credit score in terms of the ability to qualify for a loan?
It's important. So a credit score, like literally 1 point improvement on a credit score can make a difference in whether someone qualifies, whether someone even has access to a particular loan program, or what that loan costs, or what for loans, if someone's not putting 20% down on a loan, there's typically mortgage insurance. The cost of the mortgage insurance is affected by credit scores. And so we're always looking for opportunities to, make any improvement. Credit score is a good example, but I have a lot of clients who are self-employed. Portland being Portland, I know a ton of your tenants are self-employed.
Sure.
So, we have, share that in our clients a lot of our clients are self-employed. And the way that a self-employed person puts their tax return together can significantly impact what they're going to qualify for, what their qualifying income is. There is a pretty straightforward methodology that we use to calculate income for a self-employed person. And there are expenses that a self-employed person could sort of choose to categorize one way or another that will impact what the bottom line income we're using is, which will impact the amount they can qualify for.
Okay.
And so if I can talk to someone before they're filing, their tax returns, I can say, hey, if you have these sorts of expenses, talk to your accountant, and these are the line items that we're going to disregard, and this, you can basically have your cake and eat it too. You can write this off. Depreciation is one example of that. As a real estate guy, that's a big one for you.
Yeah.
Anything that someone depreciates as opposed to expensing, we add back depreciation. It does not take away from qualifying incomes.
So the more people though look at you, I always like to think of as a small business owner, I always like to think of my team of consultants, if you will. People that are part of my team. Obviously,
Yeah.
I have to have a CPA that's good, and
Yeah.
occasionally an attorney too, and all that. That's helpful. But you
Yeah.
really you fit in that mold. You're part of that.
I mean, I hope so.
Yeah.
That's certainly how I like to think of myself.
Yeah.
As a another financial professional that people need on a less frequent basis than their CPA, but
Sure.
Probably more frequently than they need their estate planning attorney, right? I'm
Yeah.
somewhere in that category, and I think when my job is done well, I think that it warrants that standing, and I try to that's how I try to
What you shoot for.
practice what I do. Yeah, that's what I'm
absolutely,
aiming
absolutely.
for sure.
So timing.
Yeah.
Let's talk about timing a little bit more. So if somebody's really on their game and they know what a great job you can do for them, they're seeing you 6 to 12 months before they want to actively
Yeah, a little
buy.
dry run, just
Okay.
kind of touch bases, make sure everything's looking good, do a little planning, lay some groundwork, and then
So you get
yeah.
through that process. Then, and is at the end of that process, then do you give them a letter? Can they get a letter from you, like when you're done with that part of the
oh,
process?
for sure. Yeah,
Okay.
once I have that information to verify that they qualify, we want to talk about what their goals are, make sure we find the loan that accomplishes what they
Their goals
want.
are. Yeah. Okay.
And it's my job to make sure that they fit the requirements for that loan, that they meet the guidelines for that loan, which can include submitting all of their financial paperwork to underwriting as well, to have it reviewed and signed off by the underwriter. So we have a pre-approval. We can write a pre-approval letter. We'll often rewrite those letters to kind of dovetail with whatever offer someone's writing. Now, if we're just doing a dry run to kind of make sure everything's on track to buy next year, we probably won't do a pre-approval letter. They're not shopping. The letter is honestly, the letter is written to the borrower saying, congratulations, you're pre-approved, but it's really for the seller.
Sure.
It's
sure.
the seller making the decision that, I'm going to take my house off the market for this person who tells me that they're going to close in 30 days, and 30 days from now they get the title and I get money.
Yeah.
And, it's a risk for them. They take the house off the market. They now can't sell it to someone else, and they want to make sure they're taking the house off the market for someone who is able to perform.
So I'm an active buyer. I've got my ducks in a row with you. I've got my letter. I find the dream house. Okay. I've got I got a broker who's helping me through the process of buying the house.
Yep.
We submit the offer with the letter. I'm assuming in today's market, things are probably pretty frothy, and you got to be, you want to put your best foot
Things are
forward.
moving quickly.
Yeah.
Yeah.
So with that, how quickly? What kind of time frame are we talking about from when an offer gets accepted to when you would be able to close on a
So
loan?
closing about
Yeah.
30 days right now.
Okay.
If we really hustle, we can get done in about 3 weeks or a little bit less than that.
Let's talk a little about, we talk about, home buyers buying their first home or their third home or fourth or whatever. How about, it sounds like you also work with investors as well,
Yeah.
correct? What's different when they come to you? Is it same process, same way, or do you treat that differently?
I mean, it is a different transaction because it's an investment, right?
Okay.
So the analysis that goes into, to some extent the process is similar. The paperwork is similar. We're doing the same things to. I kind of think of loans as having sort of two parts, and one part is like the numbers in the loan terms, and then there's just sort of execution. Like once we've decided what loan we're doing, we have paperwork and logistics we have to take care of to get across the finish line. So the
Okay.
paperwork and logistics are the same, whether it's an investment property, a vacation home, a primary residence, it doesn't matter. We're doing the same paperwork and logistics. But the conversation around the numbers is different for an investor. It's about the numbers, right?
Yeah.
So from a mortgage standpoint, the down payment requirements tend to be higher on investment property. The interest rates are a little bit higher on investment property, or more accurately, the fees are higher, and that gets sort of a very intimate relationship between interest rate and closing cost. And so, the way that plays out in the real world is the interest rate tends to be higher on investment property.
Okay.
But the process of talking about an investment property is largely kind of analyzing the numbers and determining that it makes sense. The real estate broker has a bigger role than I do to some extent in finding properties that are going to make sense from kind of an investment standpoint and cash flow standpoint, or appreciation or upside, or whatever it is that the investor is looking at.
Yeah.
I love working with investor clients because over the years, starting as a 20-something in the mortgage business, I was surrounded by people who had rental property and had investor clients early in my career. And so it just made sense to me when I bought my first home that it would be my first rental house. And when I moved out of it into another property, I bought a duplex. And when I moved out of that, I bought another duplex and lived in that. So I just started collecting rentals, fairly before I knew what I was doing, honestly.
Yeah. So that's awesome.
Very seat of the pants, but all of that to say, it's sort of like investors are kind of my people.
It's refreshing to hear, obviously, the way that you work with your clients, and that people understand that you're going to do it in a professional way that works for everybody, and that works out well.
Yeah, I think we try to I've got an amazing team I work with, and everything we do around providing good information, providing education so that people can make good
decisions. Yeah. Julie, this has been a lot of fun, and I really appreciate you taking the time to talk about the industry and your background stuff. But before we sign off on today, I wanted to make sure people know exactly the best way to get a hold of you and how to start the process with you. So how should they do that? How do they reach you?
Anybody can call or text me, of course.
Okay.
503-799-3711 is my number.
Okay.
Rate.com. /Julie F will get my homepage, which has all my contact information, and my email is just julief@rate.com.
And with that, I'll say thank you again. I appreciate everybody who's watched this and taken the time to see. And when you need a mortgage out there, please make sure that you give Julie a call, and she'll take care of you.